there's a fundamental difference between managing a problem and solving a problem. And you are factually not only performing poorer today, but then that limits your ability to progress over time. So your growth curve actually flattens. Good to see you, man.
Good to see you too. Nice to meet you on the camera thing. It really is such a honor, truly, to be able to have this conversation with you. And then, like, thanks so much for doing this.
Yeah, for sure. For those that don't know me, I am, Jared Tendler, the author of The Mental Game of Trading, and I have been coaching traders for over a decade. I've been coaching poker players for over 15 years. And I've been coaching golfers for over 2 decades. And in the trading space, I've worked with, plenty of institutional professionals, fund managers, and many retail traders just like yourselves, and what you're going to see in retail therapy is the behind the scenes work that's going to help you to create those breakthroughs in your trading. What you see here is something I call mapping your pattern. And I think as we begin our conversation here, let's kind of take a close look at the escalation of this problem for you. As you best described it in the survey, it seems like there's a fairly specific pattern that happens when you're doing well, where you get a little overeager and it tends to kind of bite in the backside.
Yes, I am specifically extremely like, this is my one. I mean, I've got a million holes in the game, but big hole that still exists in the game is winner's tilt will show up always for me.
Was that an issue in poker too?
Oh yeah, for sure.
Okay.
Yeah, tilt, much easier to manage in poker. Yeah, I already don't like losing. So when you can do nothing but lose in some of those variance spots, it's easy to walk away.
Yeah.
But yeah, winner's tilt, giving it back, always been a poker issue for me as well.
Okay. So that actually means that poker was decent practice for you to get better at winner's tilting.
Yeah.
And,
Yep.
and in trading, I think we generally would categorize it as greed.
Mhm.
Now, for everybody else, I know that greed is a very commonly described problem, but when you really look at greed, it's really just your aspirations have gotten a little excessive. Your motivation perhaps has gotten a little excessive. Your confidence has gotten a little excessive because your job is obviously to make money. So like, where is that kind of fine line between, trading your edge, trading your system, being discretionary, finding some opportunities to maybe kind of go beyond that strategy or system, and where it now kind of starts to cost you? And that line is something that only you can really define. And we can kind of do that tactically. I think we'll, as we kind of go through this worksheet, we'll examine that a little bit. But
Yeah.
more importantly, we want to look at the specific escalation that occurs for you so you can really see it happening in real time. I suspect that your awareness of this problem is not as good as it could be.
Okay.
As best you can describe. Like, what do you see when, winner's tilt, greed, overconfidence, however you want to describe it, shows up for you?
It becomes, yeah, greed's tricky because it's not really a money motivational thing.
Yeah.
It is a winning motivational thing, maybe mixed with like desire to do a really good job. And this is kind of something I've struggled ever since I moved from like a real job to a trading, because trading's not really a real job in a lot of ways
You
because
mean you
you're
don't get a
not.
paycheck?
No, I mean, yeah, you don't get a paycheck. I mean, you kind of do, but it's so process oriented and not results oriented at all, versus most of the jobs that I've ever had have all been, work really hard, do a really good job, be rewarded for that instead. So when I first started to trade full time, my first problem I ran into was that sometimes I would have hit my trades for the day and not have any more, but it had only been an hour. And I didn't know what to do with myself because, my lizard brain was still floating around like, well, you've only worked an hour. Do you think that's a work day, dude? So that was the beginning of a weird hurdle to get through. And then the desire to do a really good job just creeps in when I'm already doing one. And I feel like I'm visualizing the market extremely well that day. And that's when I think I start to put my own, thoughts and feelings and expectations into what the market's going to do, which makes it hard for me to see it when it stops doing the thing that I want it to do and starts doing what it wants to do.
Yeah. And so specifically, when you start putting your own thoughts and opinions into the market, like what has already happened? Like, what do you think is kind of sparking that for you?
Oh, it's just like it'll happen on, my perfect day setups, which are typically trend day ups with, a proper retest that has been respected, really good price action that I'm able to get in and out of. I've already banked up like a really good buffer of points to work with. And I'm like, okay, then I start to step back. If it's only been an hour, I'm like, well, if I can work this day, all day, this range could be a 500-point range day, and I can so I get out of my process in that part of my process is to not be predictive, and then I find myself becoming predictive somewhere in there. And so my process starts to deteriorate around me, even though me executing the process well is what got me to that spot in the day.
Yeah. So just for those that were following along here, what I'm trying to do here is kind of gather some information where you see kind of the triggers down below. More pragmatically is this mapping part, because if you're going to solve a mental game issue, you've got to be able to see it happening in real time. Frankly, look, if you look at the edge that you're deploying in the markets, like it's because you're seeing in real time the opportunities. Hindsight does you no good, except maybe you can build up enough patterning to generate that foresight, right? That's the back testing process, develop your strategy, et cetera. But it's all trying to generate foresight. That's how you take advantage of the opportunities. So
Yep.
Right now, we've already begun to kind of identify some of the more subtle components to this where,
Okay.
because if you can see the early warning signs, you can capture it faster.
Yes.
You take advantage of it and correct it faster. The larger the emotion gets, the larger the problem gets, the harder it is for you to recover in real time. You're going to have to take breaks. It might mean you have to come back the following day. To me, I think if you're getting excited and you're seeing a direct cost on your execution at that point, right, it's going to be hard for you to recover quickly. Now, I'm not saying it can't happen, but now recognizing that you're putting your own thoughts and opinions into the market, you will kind of say more accurately, starting to become predictive. But like, what's the difference between the predictions in this regard versus when you've gone through your pre-market prep, you have a sense of what the market's going to do? Is it more of a predictive component now versus more of like a probabilistic anticipation, like sense of what's going to happen? How would you distinguish those points?
Maybe. I mean, honestly, Jared, I don't really put a lot of thought into what I think the market's about to do. So part of my edge and my process is like I kind of eliminate that as much bias as humanly possible until the day starts. So bias is kind of my edge's enemy in a lot of ways. So the fact that it creeps in and I start to fill in the gaps of what's about to happen in the rest of the day is just like the more I visualize that, the smaller my edge seems to be, like in direct correlation, maybe.
Yeah. So we're actually going to create a kind of a zero here.
I have so many steps to this problem that it has to start at zero, everyone.
Well, actually, I'm saying zero is ideal.
Oh, okay, good.
I'm saying like there's no greed here. This is your optimal, right?
Yep.
Eliminate as much bias as possible. Period. End of story, right?
Yes.
So what would be the earliest indications, right? Is now like having that line of like, this could be a 500-point range day. Now, all of a sudden, that's more of like predictive optimism, excitement that like this could be a huge day.
Oh, yes.
Where and how does the bias start to come in a more subtle way that we could define as maybe levels 1 or 2 here?
I would say normally a big part of my process too, if I'm going to try to catch a trend, which is the day that this problem sets up on, I will have not taken an ad at a place that would have been maybe a B trade, maybe a marginal ad, and that ad would have worked. And so that plants a seed into my brain and into my bias that like, okay, the next marginal ad, you can go ahead and take that because this is going to be one of those nice, easy, grindy days where you can get away with adding to positions earlier. That's a big one for sure.
That phrase, you can kind of get away with it.
Yeah, when you're getting away with stuff, you feel like, variance is on your side. You feel like the dealer's on your side. You know what I mean?
Yep. Okay. It's so crazy to me like how kind of the end of statements is where the gold kind of lives.
Oh, cool.
And I say this again for those that are watching, like, journaling is a huge thing for y'all. I mean, and to do that in a way that does not edit like kind of the thoughts, the emotions that you're experiencing. It's very difficult to kind of really solve more complicated problems just in your own head. And you know that it's a more complicated problem if you keep repeating the same mistake again and again, knowing better, right? This is not a knowledge problem. This is, again, that kind of definition of insanity where you just kind of can't stop it. But again, you're not dumb. Emotions make you dumb. But when you're trying to figure out and problem solve this stuff, it's important to write because that's why I think, so you talking this out, you're getting way more detail out than what you sent me in advance, which tells you that none of this is really new. It's all kind of in your head, but what you share is oftentimes what you think is most relevant. But when you step back and start to look at it, we get to examine some other pieces. So what you just said was, it starts to feel like variance is on my side.
Yep.
Okay. So that line, I think, really crystallizes what's beginning to deviate in your mentality, where that it's like a prediction. Ah, variance on my side. I'm predicting everything kind of in that line, in that favor. But
Yep.
there's part of you that believes that variance is on my side. Can you feel or sense what that is? Kind of, I've tried to eliminate as much bias as possible, but now I feel like variance is on my side. I'm not consciously thinking that way.
Yeah.
But what's the first indication that you're actually believing that?
Yeah, I'm taking B trades and expecting them to work. Like, I mean, I know in my soul the variance is on no one's side. It does not care about what time it is or how many times it's gone against you or for you. Like, I'm aware of how neutral variance is. But yeah, I float away from that knowledge and into my cloud of, this is going to be an exceptional trading day. I'm going to smash this whole range. Yeah, stuff like that. I get out of my It seems to be something I have to go back into like every 6 months. I actually just had to do it the other week in front of everybody. Is I have to go back to base hits and understand that, this is where my edge lives. It lives in here. But yeah, I drift away from it sometimes.
This is why. Again, this is not so incapacitating that it's causing you to fail, right?
Sure.
This is a big enough problem that we're talking about it, but one that I think a lot of traders get sucked into thinking that they can just kind of manage it. And as you said, you kind of will fall off track. You'll, not realize that you ended up in Ohio as you were trying to drive to Pennsylvania. Like, oh, wow, okay, not the end of the world. You kind of take the detour and you can get yourself back here. But it's costly.
Yes.
So there's a fundamental difference between managing a problem and solving a problem. As traders, your goal is to have as much of that unbiased, clear mind, receptivity. You don't want to be imprinting things into the market because it is actually kind of clouding your vision, clouding your judgment, and you are factually not only performing poorer today, but then that limits your ability to progress over time. So your growth curve actually flattens. So there's a short-term cost, there's a long-term cost. When you solve the underlying cause of this issue or any issue you're facing, right? And I'm not saying it like kind of happens instantaneously, but as you kind of work the corrections in, as I like to say, kind of chopping down a tree with an axe. It's like building muscle, right? It's going to take a little bit of work to develop, but you're already strong. So we're just trying to make you maybe a little bit more functional, right?
Oh, yeah.
So
That makes sense. It's kind of like at time I try to plug a hole in the game. My focus isn't like never doing it again. I try to just make the time between when I made that last mistake and when I make it again a little further each time that I do it. And that to me is progress. I don't know if that is a cheap way to call that progress, but
it is, but I'm guessing that the way that you do that is by shutting things down prematurely.
okay, possibly. Yeah.
Like you probably recognize these warning signs. You're like, all right, I'm done for the day. I'm going to stop. I'm not taking 9 trades today. I'm only taking 2 or 3.
Yep. Yeah. No, I size down, I put the walls up. Yes, yeah, absolutely.
Yeah, which again, I think relative to just like being blind to it and steamrolling it, yeah, that is the correct adjustment to make.
Okay.
But that's not the long-term like tactic or the long-term way that you want to be trading. You want to be free of this issue so you're just able to actually take advantage of these days with more precision.
Yeah.
Size up in spots where the risk makes sense to.
Yeah. Okay.
Yeah, so this like taking B trades and expecting them to work. Did you recognize that before as being, essentially like a warning signal for you?
Oh, for sure. Yeah. I mean, I can often look back and be like, yep, that's an early entry because I was excited about that other early entry that worked and I didn't take it. Yep. That's
Yeah.
a classic one.
Yeah. And early entries are the classic way you identify those B trades.
Yeah, for sure. Yeah, it's not about hindsight too. I mean, you can see it. When you're in a bad trade as soon as you're in it. So, yeah.
And so from a mental, emotional, physical standpoint, right? So, those that are watching this, right? There's also these kind of actions and behaviors. We can be recognizing the physical signs as well as the mental ones, right? The specific thoughts you have, the feeling that's changing. Do you recognize kind of the mental, emotional, physical sense of like, all right, well, when you're taking B trades and expecting them to work, how might you recognize that you have deviated from that kind of optimal, unbiased state?
I don't know if I have a physical manifestation of it that I can really pull from. I do stay pretty chill and calm just because I keep my size and risk under control. And don't really.
Do you scroll through charts faster? Do you change time frames?
Yeah, I would say that I'm definitely more focused on like I will stare at the DOM. If I'm in a bad position, I'll try to find some sort of order flow or some sort of player to show up and help me justify being in there. Yeah, I can say that. That's for sure.
Okay. And then, so anything going through your mind at that point that, any specific thoughts that you're having that would kind of further highlight that level of greed?
No, I don't think so. I think just looking for that confirmation. So, I have a bunch of different tools that I use for execution. And yeah, I'll just be staring intently at the side that I want to win, willing price to do what I would like it to do, not what it's about to do. Also becomes like an order flow bias, and it makes you look at the DOM in the middle of nowhere when you have no business looking at what those orders are doing.
Yeah. I guess it's not a specific thought, but it's sort of as if you're willing price. So we've kind of gotten the early signs here, which again, I think for everybody else here, it's vital. You can't stop what you can't see. And if you wait too long and the motion gets too big, some of you are just going to get completely steamrolled by it. And the mistakes you're going to make, especially if we're dealing with FOMO or revenge trading or, fear, anger issues, right? They're going to come so hot and so intensely that those mistakes are going to happen. I would suspect for you that, kind of capturing this sort of first, kind of 5 pieces here is enough. For our purposes, we'll probably stop here. But for your
Okay.
purpose, I'll send this to you.
Oh, please. Thank you.
I would suggest, kind of looking at what it looks like when it gets bigger, right? You've already sort of shut it down before it kind of gets to this point.
Yeah.
But just imagining, okay, well, if I wasn't managing this problem and I let the worst side of myself just get unleashed, like what would that look like? Because we might find another flaw, another bias, another illusion, another wish that's kind of powering this thing. And that's what we're going to do in a second here. But again, just to kind of finish up our conversation now, that's,
Okay.
I think, the next piece of this puzzle here.
Are we in C game territory right now? Is that what we're working on?
Yeah, I would say this is for you, a solidly C game territory.
Okay, cool.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.